Welcome to Finloop. Every long-term investor sooner or later hits the same wall. You've done the hard part, you've saved the money. But now what? How do you actually invest it to build real, lasting wealth? It turns out there are two really different paths you can take, and today we're going to figure out which one might be yours. Okay, let's just start with a hard truth, something every successful investor has had to come to terms with. Finding a truly great company, one that can seriously change your financial future, it is incredibly difficult. It's probably the hardest part of the entire game. Think about this. Over your entire investing lifetime, if you're out there picking individual stocks, you might only find this many huge portfolio-changing winners. Just 10 to 20 companies. That's it. And get this. Those handful of winners, they only show up after you have dug through hundreds, literally hundreds, of other companies. We're talking analyzing them, buying them, and yes, selling a lot of them that just don't make the cut. It is a relentless filtering process. There's this great saying that just nails it for investing. You really do have to kiss a lot of frogs. Even the best of the best, the legends, they are constantly turning over stocks, looking for those very, very few princes worth holding on to for the long run. So this challenge, this reality, it forces every single investor to a fork on the road. You've got to choose. You have to pick a philosophy for how you're going to approach this whole difficult search for winners. All right, let's talk about the first path. It's a strategy that gets its name from a much simpler time, believe it or not. People used to literally take their most valuable papers, like stock certificates, put them in an old coffee can and stick it under the bed and just leave it. And that's the core idea. It's pretty simple, actually. You do all of your research and your hard work up front to pick a whole basket of stocks you think have promise, and then, this is the key, you completely take the decision to sell off the table. You buy and you forget. Now, the real genius of this strategy is how it solves for one of our biggest weaknesses as investors. We tend to sell our winners way too early. So with a coffee can portfolio, you'd buy a pretty diverse group, maybe 30+ stocks, and keep each position small. Then, by basically locking it away and promising to never sell, you stop fear from making you sell a great company during a market crash. You force yourself to let your winners run. Okay, now let's look at the second philosophy, which is, well, it's pretty much the total opposite. This path isn't built on a rule like never sell. No, it's built on a foundation of deep, continuous understanding. This is not about hoping for the best. This is about earning your confidence. Conviction investing means you are doing the hard, intense work to understand a business better than almost anyone else out there. It's that deep knowledge that tells you what to do when the market starts going crazy. And this table just lays it all out so clearly. Look at the difference. The coffee can approach is all about wide diversification, and it basically treats selling as a bad thing, a liability. But the conviction investor, they run a much tighter, more concentrated portfolio and see the decision to sell or to buy more as a crucial skill. It's a powerful asset. So the main takeaway here is that conviction isn't some passive feeling you just have. Nope, it's the active result of nonstop work. You have to earn the right to know when to buy, earn the right to know when to hold on tight through a storm, and, just as important, earn the right to know when to sell because things have changed. And this right here is where conviction becomes your superpower. For a conviction investor, a volatile market isn't scary. It's an opportunity, because pretty much every single year, even the absolute best companies go on sale. And having true conviction is what gives you the guts to actually do something when that happens. When a fantastic business that you know inside and out suddenly drops 40%, you're not panicking with everyone else. You're buying more. Why? Because you've done the work. So, after all this incredibly demanding work, where does this path of conviction actually lead? Well, it leads to what I think is the ultimate goal for any serious long-term investor. They call this a self-driving portfolio. It's this small collection of companies that are so excellent, so well-managed, and that you trust so deeply that you can basically take your hands off the wheel. The company just keeps executing year after year, decade after decade. And if you want to see the power of this in action, get this. One legendary investment fund pulled off a mind-blowing 921% return over 13 years. For comparison, the world index did just 116%. Their secret? They found and held on to just 3 of these self-driving businesses. Building that kind of trust, that kind of portfolio, it takes years. Years of research, years of kissing all those frogs we talked about. But getting there, man, that represents the absolute pinnacle of long-term conviction investing. So as you look at your own investments, the real question isn't just what do I own, it's why do I own it? Are you on that coffee can path, using wide diversification and a strict no-sell rule to your advantage? Or are you on the path of conviction, doing the really hard work to build a portfolio you can trust through thick and thin? There's no single right answer for everyone, but knowing which path you're on, that's everything. Subscribe to Finloop for more insights on finance, investing, and global markets.